Okay, welcome back to the deep dive.
Good to be here.
So we've got some interesting developments pulled from crypto horizons lately.
Yeah, quite a mix. Policy stuff, corporate moves, some tech updates too.
Exactly. And our job really is to sift through it and figure out, what's the takeaway? What does it mean for you trying to make sense of this space?
Right. More than just the headlines, the so what.
Okay, let's dive in. First up, something on the regulatory side here in the U.S. about retirement savings.
That's right. The Department of Labor. They've actually pulled back their 2022 guidance.
Oh, yeah, I remember that. The one that was pretty cautious about fiduciaries putting crypto into 401ks and things like that.
Exactly that one. It expressed, let's say, serious concerns.
So rescinding it. What's the impact? Does it mean crypto has to be included now?
No, not at all. It doesn't mandate anything. But it definitely removes a sort of official warning sign.
Ah, okay. A psychological barrier, maybe?
Yeah, and maybe a regulatory one, too. It kind of aligns with some other, let's say, more digital asset-friendly signals we've been seeing.
Uh-huh.
But, and this is key, fiduciaries still have their duties under ERISA. That's the Employee Retirement Income Security Act.
Right. The duty to act prudently, solely in the interest of the plan participants, that doesn't go away.
Precisely. They still need to do their homework, be really careful, justify any investment decision.
So it's less of a don't touch crypto warning from the DAWs,
Yeah.
and more like, okay, the decision is yours, but be extremely diligent if you consider it.
That's a good way to put it. It opens the door for them to evaluate crypto options, provided their analysis shows it's prudent for their specific plan. The burden's on their own rigorous risk assessment now.
Okay, interesting shift. Now, moving from retirement funds to corporate balance sheets, GameStop made a pretty big splash.
Yeah. GameStop, they announced their first, major jump into crypto investment. Bought over $500 million worth of Bitcoin.
Wow, $500 million plus. That's a significant move for GameStop. Where'd they get that kind of cash?
Well, they recently raised funds. They did a big convertible bond sale.
Convertible bonds, right. So that's debt that can potentially turn into stock later.
Exactly. It's a way to get capital now with that conversion option down the road.
Okay. So they raised money and plowed a huge chunk into Bitcoin. Feels a bit like the MicroStrategy playbook, doesn't it?
It definitely echoes that trend, yeah. Corporations looking at Bitcoin as a potential treasury asset.
Yeah.
A place to maybe store value, potentially get some upside, outside of just holding cash.
Makes sense. But for GameStop, given their, shall we say, unique situation, is it just trend following or something more strategic? How did the market react?
Well, it's definitely a bold diversification play for them. The sources did note their stock dipped a bit after the news.
Oh, really?
Yeah, suggests maybe some investors are a bit wary, worried about the volatility or maybe questioning how Bitcoin fits with their main retail business. It's definitely a high-stakes gamble for them.
Speaking of high stakes and big numbers, there's this prediction that caught my eye from JD Vance.
Ah, yes, Vice President Vance. He projected over 100 million Americans owning Bitcoin soon.
100 million, that's what, nearly a third of the U.S. population? He's quite known for being pro-digital assets, isn't he? Even proposed some legislation.
Very much so. He's been quite vocal about wanting a, let's say, friendlier environment for crypto in the U.S.
You're right.
So his prediction, it really underlines this view you hear sometimes that digital assets are moving from niche to, maybe a standard part of people's finances.
A sign of potential mainstreaming.
Exactly. It reflects a belief, at least among some observers and policymakers, that widespread adoption isn't just a maybe, but could be coming pretty quickly on a really large scale.
Okay, so we have potential policy easing, corporate adoption, predictions of mass ownership. What about the tech enabling all this? Wallet interoperability seems key.
Absolutely. And a big move there, MetaMask, the dominant browser wallet for Ethereum.
Everyone uses it.
Well, they've now added native support for Solana.
Wow, okay. That feels significant. Those two ecosystems, Ethereum and Solana, often felt pretty separate, almost like rivals sometimes.
It is significant, yeah. And it's not just like a basic link. Users can actually manage their Solana tokens, interact with Solana dApps, do swaps, all inside MetaMask.
So basically smoothing out the user experience, bridging these two major chains, that removes a ton of friction, right, for people maybe wanting to try out both.
Definitely. It makes it much easier. And the sources mentioned mobile support is coming too.
Ah, that's huge as well.
Yeah, it really pushes towards that idea of a more connected, sort of seamless Web3.
And sticking with Solana for a second, there's also a price prediction floating around from a big bank.
Standard Chartered, yeah. A well-known global bank. They put out some pretty optimistic price targets for SLL, Solana's token.
Oh, yeah. What are they thinking?
They're forecasting SOL might hit $275 by the end of 2025 and maybe even $500 by 2029.
Okay, those are some serious numbers compared to where it is now. What's driving that optimism from their side?
Well, their analysis points to, Solana's tech improvements, its growing ecosystem, things like that. But, and this is important, they added a big but.
Uh-oh. What's the catch?
They basically said SOL will likely keep lagging behind Ethereum in value unless some really new compelling use cases pop up on Solana.
Use cases. So things beyond just trading tokens or DeFi speculation?
Exactly. Things that really pull significant demand onto the network for reasons other than just price action. They need applications that people really want or need to use.
So even with institutional interest in tech like the MetaMask integration, the bank is essentially saying Solana's long-term value really hinges on building out actual useful applications. It's not just about hype or market cycles.
That's the core message. Infrastructure and market sentiment matter, sure, but sustainable value. That comes from utility, real-world stuff that makes people choose that chain. So, okay, let's try and pull this all together. What's the big picture here?
Well, we've gone from the doll easing up on retirement fund warnings to GameStop making a huge Bitcoin bet, predictions of massive U.S. adoption.
Vance's 100 million. Yeah.
Then MetaMask bridging Ethereum and Solana, making things easier.
Big tech integration step.
And finally, these optimistic but conditional price targets for SOL from Standard Chartered.
It really paints a picture, doesn't it? You see these different threads. Institutional interest is clearly growing, barriers are lowering, accessibility is improving through tech.
Yeah, it feels like digital assets are steadily integrating more into the kind of mainstream financial world, and the tech is evolving to support that.
But like that Standard Chartered analysis highlighted, there are still these big questions hanging over it all.
Right, the volatility is still there, and that fundamental need for real-world use cases beyond just speculation to justify these high valuations long-term.
Exactly. So maybe the final thought for you listening is this. You've got these strong forces pushing towards more adoption, more integration, big money, easier tech, positive predictions. But you also have the reality of market swings and this constant pressure to prove the underlying value through actual use. So faced with these kind of conflicting signals, how do you plan to navigate this? How do you assess the risks and opportunities in this really complex, fast-moving space going forward?